Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 5:20 in New York. It is Thursday, July 21st, 2016, and we are looking at day 10. The first 9 days, we had consecutive new price highs, record highs in the Dow Jones Industrial Average. So at some point, of course, we have to see a down day, and that is today. Not off tremendous, but off about 0.5%, just under 0.42 at 18,517. Standard & Poor's 500 also trading lower, off roughly 0.38% on the day, almost 0.5%. 21.59 is the actual close, 21.75 on the high, and 21.53 on the low. Oil also breaking lower today, down over 2% on the day at 44.54. So traders, after witnessing roughly a week and a half of solid upside moves in U.S. equities, no doubt today is a day of profit taking. Now, this all began roughly at 1980, marking the end of June. That's right in here. Tremendous engulfing bullish. We saw an engulfing bullish in gold and silver today. And of course, from there, we saw this market really run away, break above record historical highs, move to new highs, not on a daily basis in the same way that the Dow Jones Industrial Average did. You can see these red candles here and here. These were 2 days in which it didn't. And then, of course, today we're actually down off about 0.4%, 21.59. So is this going to be our first kind of our glass ceiling, our point in which the market, at least on a short-term basis, finds a little bit of resistance? Well, we'll have to see. We'll see if there's follow-through overseas. We did have markets overseas last night, global equities markets, trading under pressure in Europe. Asia, though, was strong, so we'll have to see how that all pans out. Now, in terms of other markets that we are looking at, we do have some weakness in the U.S. dollar. Let's take a look at that. And what I've just pulled up is a daily chart. U.S. dollar index, of course, traded against a basket of currencies. We can definitely see some pressure here. This, in terms of a candlestick itself, is a hanging man or a hangman. You've got that long tail, approximately 3 times the length of the body. The body needs to be a very, very tight range between the open and close, and you want to have as little of a tail on top of that as possible. There is a little tail, but nonetheless, this does qualify as that type of candle. That type of candle in and of itself is not a tremendous indicator that this market's going to go under pressure. And we have seen really the dollar, although it's been trading higher, if you take a look at the last, week and a half, it's done it in a very plodding manner. Real big spike up, gives some back, trade sideways for a while. It spikes up, then corrects for these 3 days, spikes up here. This is really a consolidation. And then we've had the 2 days prior to this, meaning Thursday and Wednesday, move to higher ground, only to give some of that back today. Traders, also take a look at the dollar yen today. You've got this move from roughly 107 down to 105.79, a 1.32% move, which is a huge move in the currencies, and that, of course, gives you an engulfing bearish in terms of a straight candlestick pattern. And so, traders, lastly, do want to take a look at crude oil. As you know, I have been on record believing that crude oil would go anywhere between $42 and $44 per barrel. There's no doubt that we have seen the market dip into that price point. We saw that really, this being a daily chart, we saw this yesterday. Although it did close higher on the day, today we've closed well below this resistance line that we have created from a cascading channel line with that upside bias that we've seen. And there's no doubt we've broken through there as we identified last week. I think we're going to head lower, But most importantly, I also think we're going to be trading sideways, as I said, through these summer months in crude oil. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.